Thank you, Matt. Well, on Wednesday, Industry Minister Tony Clement rejected Australian mining giant BHP Billiton's offer to take over Potash Corporation of Saskatchewan. And that is a decision that could have huge ramifications for future international deals. And joining us now to make sense of it all is Nick Bontis, an award-winning professor from the DeGroote School of Business. Nice to have you with us.
Happy Friday, Taz.
Thank you so much. So let's talk about this deal. Were you surprised by the government's decision on this?
I was a little surprised that they said no.
Really?
This was the first time ever that a government has actually gone in and said, no, business, you are not going to do the deal that you want to deal. So, you know, shades of protectionism. Ooh, what an ugly word. I don't know if that's going to happen right now. But part of me says, you know what? Good. Let's do this. Let's protect our Canadian resource. I'm Canadian. Let's be proud. The other part of me says, you know what, this is a good negotiation tactic. You know, Australia came in, they said 40, let's go for 45. And let's go for a few more other provinces. Perhaps this is a negotiation tactic.
Because this wasn't their first bid, in fact.
Well, go back to the table and give us more. Tell us that we're going to keep some jobs. Tell us that we're going to keep management there. Tell us you're going to move a whole bunch of people to Saskatchewan and that you're going to maintain tax revenue. The Saskatchewan Premier will be happy if you keep on giving those promises.
So you think there is a benefit to selling this company? I mean, other than the person who gets the 40 million.
Well, the benefit is actually a very complex term because you're talking about net benefit to Canada. This is the common term that we've been using this with. Net benefit really means two things: jobs in Saskatchewan and tax revenue through Saskatchewan onto the rest of the country. So if that is the case, then absolutely it should happen. But I'm a little nervous that the government in Australia is going to come back and say, you know what, we're not going to up the ante on the 40 billion. We're going to say that we're going to keep management. We're going to say that we're going to keep employees in Saskatchewan. But you know, the last time government actually heard promises from a business and then the business reneged was U.S. Steel,
absolutely.
And we see what happened with that story.
We're going to get to U.S. Steel in just a second, though. Let's talk about the impact of this decision on other countries doing business with Canada. Do you think they're all watching and saying, hey, look, Canada actually took a stand for once, so we're going to have to be careful now?
Well, it just means that if you're going to come and do business here in Canada, you better have a good deal in place because we're not just going to freely, willy-nilly give up our assets. So I was a little fearful that the international marketplace was going to actually turn this into, oh, don't do business in Canada. They have protectionism. They're going to protect everything. They're going to make unrealistic demands and prices for assets. But you know what? The initial reaction was actually the stock price went up for Potash and for Billiton after the following day.
Just building on what you say, though, this is a Harper government. This is a government that talks about free trade, and that, on the other hand, I mean, is purportedly reverting to protectionism. So how do you balance those?
Well, now, Taz, you're bringing politics into the equation. How about Mr. Harper maybe saying, hey, I want to protect some of the seats in the next election in Saskatchewan and Alberta? So that could be the play. That very, very complex decision.
Perhaps. Okay, well, let's go on to U.S. Steel, because you mentioned that earlier. They're hours away from locking out workers, 900 workers, so a lot of people. Would this be an argument for disallowing a foreign company to come in and take over one of our companies? It
would be easy to say that, Taz, but the reality is you can't. You can't just disallow companies from coming in to do business. I mean, for example, you could say, well, RIM is trading at like $55 today, and Microsoft offers them $100. What do we do? Disallow Microsoft to take over RIM? This is the way the nature of the business works today. We are in a global marketplace. Now, I feel for the 9,000 pensioners because these are people here in the city of Hamilton, local community, and they're trying to actually negotiate down the pensioner adjustments and make sure that the 900 people that are working there try to keep their jobs. So they're actually pitting the 900 employees against the 9,000 pensioners.
Very unfair.
That's a very sad situation.
And what if it comes down to a strike position? Maybe we'll go back to the lockout. What does the company stand to gain by locking out its employees? And should it come down to a strike, what would be earned from that?
Yeah.
It seems like the company, the big guy, always wins in this case.
Well, in this particular case, the lockout is going to take place, I think, simply because of capacity issues. You know, the numbers that I hear are about 45% in terms of all their production at capacity. You cannot sustain a corporation in the manufacturing industry at 45% capacity in the long run. And we know that U.S. Steel has locked out other businesses in the past. For example, we know they did it in Lake Erie. We know they've locked out their American. Some people are arguing, well, they're going to lock out the Canadian businesses to protect the American ones. But that's not the case either. They locked out Michigan. They shut down Illinois. They shut down Alabama. So it's really just a matter of understanding the nature of demand in the economy. And right now, unfortunately, the auto sector has not picked up again. Appliances and hardcore durable goods manufacturing has not picked up yet to actually get all the steel that they need for the manufacturing process.
So you don't think this is just taking us one step closer to shutting this place down completely and moving south of the border, as it appears to be the case case with Lakeside.
It appears to be that. I don't want that to be the case. It would be a very sad situation, especially for our community, Taz. So I'm still hoping that that's not going to happen here.
Okay. I hope so as well. I'm sure our viewers do as well. Let's talk about the Loonie, because for, I think it was just before 10 o'clock this morning, it was above parity. It hit parity. And we're all wondering how it was going to close the week out, and it closed at 99.94 cents US. You're predicting that it'll be above parity and, in fact, stay there for some time.
That's right. My prediction, I predicted this about a month ago, that we'd stay at about parity or above right through till Christmas. It makes sense that we're at parity. We got $1,400 gold and $86 oil, and we're a golden oil country, excuse me. And it's not just, as I mentioned before, that the Canadian currency is strong. It's that the U.S. is very weak. You know, if you look at the sterling, it's at 160. If you look at the euro, it's at 140. Even the Australian dollar is above parity. So the good news is that we have a strong Canadian dollar, which means our purchasing power in the U.S. is strong. Go down to Buffalo, do some shopping, get a little bit of discount. The bad news, of course, is local businesses here, like manufacturers, are struggling.
Would this be the time to go and convert your money, or would you say hold off and wait a little bit longer? Because everyone wants to save.
I know. Everybody wants to time the conversion. Well, let me tell you something, Taz. If I knew exactly how to time the conversion, I wouldn't be sitting here talking to you. The bottom line is, when you need cash to go to the U.S., go ahead and convert your cash. Either way, you're going to end up paying 2.5% service fee for conversion. It's the service fee that's going to kill you, not necessarily the currency.
Okay. Let's talk about a big announcement this week. The province announcing funding to make Hamilton one of the first of 14 centres in what it calls a network of excellence, or one. How can we make the most out of this distinction? Because there's not a lot of money behind this.
Well, this is actually a very interesting story, Taz, and it links so closely to the fact that we're having problems with U.S. steel. You know, It's this migration from the industrial era to the knowledge era. And you know what? The market is sending Hamiltonian signals. It's basically saying, hey, Hamilton, wake up. We have to move to more professional service-oriented occupations. We have to move to knowledge-intensive innovation. You know, the network of excellence, a big central piece of that's going to be the McMaster Innovation Park. Absolutely. Commercializing all the R&D and the research that we have at McMaster University is going to be very, very important for our success moving forward. So I think it's fantastic news that Ontario has decided to say, Hamilton, you're doing the right thing. Let's move forward with that migration from the industrial era to the knowledge era. It's good news.
You know what you were talking about earlier, the Loonie doing so well against the greenback. A lot of people are thinking ahead to Christmas. This might be the time to go and start buying those presents. What they might be buying is the XBOX Kinect. We talked about this a while ago, and you thought it was going to be a big hit. Are you still thinking that way, and what are your projections for sales?
I think they're going to blow the roof out of sales on this. This is such a cool machine. I mean, think back to how we played video games 5, even 10 years ago. We all had to hold something in our hand. Now we're holding nothing. All we got to do is stand in front of this machine, and it actually senses our movement. So it's taking video games to a whole new category. There's 3 things, though, that I got to warn consumers. 1, furniture in the room. If you have furniture in the room, the camera actually intercepts that as a message. Perhaps it's an extra limb or an arm or a leg. So you have to watch the furniture in the room. You have to actually be in a big room and clear out all the furniture. The second thing is the color of clothing that you're wearing. If you're wearing, for example, a black jacket and there's a black wall behind you, the camera might have a little bit of difficulty distinguishing your arm versus the wall behind you.
Very interesting.
Yeah, and the third thing is there still seems to be a little bit of lag time. So for certain sporting games, for example, track and field and soccer and hockey and dancing, it's a great game. But for other things, for example, driving, doesn't make sense.
Yes.
For driving, you still need a steering wheel, and Kinect is not there yet.
And what about the price point? I think it's about 150 bucks.
Yeah, 150 bucks is really not that bad. I mean, I can see a lot of parents basically saying, all right, kitty, you already have the Xbox, I'll tap in $150 for your Christmas, and a whole new slew of games will be coming out by then.
Okay, really quickly now, let's talk about virtual goods, because that is big business. We're talking $1.6 billion in the U.S., and those are things that you buy in cyberspace, you know, on FramVille and Sorority Life. I've never purchased one, but apparently a lot of people are. How do you make sense of this?
Well, this is the new currency of the virtual world. So for a lot of us who are already on Facebook, what you might not know is that FramVille is the largest virtual world within Facebook. 55 million people participate on FramVille, and that's what they trade. They trade these credits. It's like an internal currency, and actually Facebook makes 30% margin on all these credits that are traded.
For people buying nothing.
That's correct. Just to buy, you know, a fake orchard or a fake game on your farm. So it's the latest trend.
I
don't get it either, Taz. I don't play.
Phenomenal. Someone's making a lot of money off this. Well, we got to go. That is Bontis on Business for this week. Be sure to check out his website, nickbontis.com. Nick, always a pleasure having you with us. Thanks so much.